At a hearing, the Senate Banking Committee confronts cryptocurrency experts on systemic danger. The Senate Banking Committee grilled a panel of cryptocurrency industry experts Tuesday about systemic dangers during a session titled Cryptocurrencies, What Are They Useful For? Several senators made a point of praising the industry's favorable characteristics. Senator Cynthia Loomis, Republican Wyoming, stated that open-source finances transparency and openness can help increase financial inclusion. Senator Sherrod Brown, Democrat Ohio, stated that blockchain technology might be used for a variety of non-financial purposes. However, the room appeared to be mainly dubious that cryptocurrencies would be a viable alternative to the existing, deeply dysfunctional financial system. Rather than subjecting our financial system to the vagaries of huge banks, crypto subjects it to the whims of some shadowy, faceless group of super programmers and miners, which does not sound any better to me, Senator Elizabeth Warren, T-Mass, said. Warren also urged Treasury Secretary Janet Yellen in a letter on Tuesday to establish a framework for federal agencies to utilize in regulating cryptocurrencies. As demand for cryptocurrencies grows and these assets become more integrated into our financial system, consumers, the environment, and our financial system face significant threats, Warren said. Two major themes. Legislators were obsessed on two primary issues: the actuality of cryptocurrencies' decentralized character, that is, their independence from centralized institutions such as banks, and system failures in the crypto markets that could have ramifications for the traditional financial system. Crypto, when viewed realistically, is not a magical get-out-of-the-financial-system-for-free card. It suffers from the same problems, said Angela Walsh, a hearing participant and a professor at St. Mary's University School of Law. We must recognize the concentrations of power within it and make deliberate policy and risk choices about how to address them. Walsh, who is also a research associate at the University of London's Centre for Blockchain Technologies, sat on the panel with Jerry Brito, executive director of the Coin Center's research and advocacy organization, and Marta Belcher, head of the Filecoin Foundation. In response to various questions about the decentralization of cryptocurrencies, Walsh cautioned that taking crypto proponents at their word could mean turning a blind eye to concentrated pockets of power within crypto systems, such as core software developers and miners who can use their position of power to affect users of the systems. Is there a systemic danger? Members of Congress also questioned the panel on the growing concerns in cryptocurrency, which are cascading into the conventional financial system, as Senator Pat Toomey, RPA, described it. While that is feasible, according to Brito of the Coin Center, the US should not shun cryptocurrencies but instead provide proper safeguards for hedge funds and other market participants. He emphasized that cryptocurrencies do not yet have the scale or penetration into the economy to have systemic repercussions for everyone, citing recent statements from Atlanta Fed President Raphael Bostic, which were repeated by St. Louis Fed President James Bullard. Back in May, during the sell-off in Bitcoin and other cryptocurrencies, both policymakers allegedly stated that they did not view digital currencies as a systemic risk. Brito noted that while a glitch could represent a systemic risk to digital currencies held by hedge funds and others, the same could be said about any commodity, and cryptocurrencies are fundamentally commodities. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.